just for some price action, and then we're going to jump into the discussions as
I think we're live already. Hey guys, so we're supposed to be doing a debate between shitcoins and versus Bitcoin, and I don't know, this morning kind of got away from us, so we're gonna take like 10 minutes, Joe and I, real quick for the live stream YouTube audience, and just look at the price of Bitcoin, because the price of Bitcoin has been going a little bit like crazy and going down. Hope the live stream audience can hear us just fine. I'm gonna check the microphones. It looks good. We're going straight to screen share for the live stream audience. So here's the weekly chart. Actually, I'm gonna go to the daily chart. Joe can look at it as well. Here was my expectation of where it would go. I really did expect the price to fall fairly heavily yesterday, and the price did fall fairly heavily yesterday, but I expected it to fall from a lower area. Actually, the audience can't see it, so I'm not sure why I'm using the big microphone. But I was expecting the price of Bitcoin to drop yesterday, which it did, but clearly not to the levels that people on the live stream are seeing on the charts. Today's candle on a daily chart actually looks really, really bad. And if those of you that watch my videos, you see that I was expecting the price of Bitcoin to potentially bottom yesterday, but not the way we had a rally going into yesterday. So right now, I am very, very bearish on the daily chart. And until the price gets back above 35,000, I can't see myself being bullish. So I'm looking at this daily chart. The current price right now is 31,100, which is higher than it was this morning at 30,200. The swing low price, of course, a few days ago was 28,725. And at the moment, I don't see a reason why we're not going to go lower than that. Like I don't see it. So I continue to be very, very cautious. The weekly candle is going to end any minute. And the weekly candle has a little bit of support, but that candle structure also looks terrible. So as of right now, I would only be interested in buying Bitcoin if the price goes above 35,000 or crashes down below 27. Joe, your quick thoughts.
Good morning, everyone, and thanks, Tom, for having me on your stream. And hello to all the live audience for, whoever's curious on price. So according to my signals, we have hit like a pretty nice overextension. Sellers definitely overreacted here on this sell-off. So there's a ton of support, and it's actually not much weaker than the support that was there last time we were threatening to break below 30K. So this is definitely an area of strong demand. So I would actually be very surprised if we don't bounce here. And I really think we should get back to something like 35,000 and probably set ourselves up for a run back into the 20s. Wherever the price ceiling forms, but we're crazy. In the minute that I said that, we were on our way out of the hole, and then we freaking fell all the way back down.
Yeah, so those of you that are watching my live stream, I don't think this structure was all that wrong. It's just slightly delayed. So all I got to do is just slide these things over a little bit, and I can actually move this up a little bit to kind of match what's happening now. So I still think that it's somewhat likely to have an actual capitulation. Some people think that traders capitulated. I saw a couple of things on Twitter about that. But based on the candle structure, it doesn't look that way. I don't do on-chain analytics, but this is not the area where I'm rushing in to buy. I'd rather wait and stay patient.
The one thing I want to throw on the capitulation thing is like capitulation comes in phases. There's always the first wave of sellers, and that's always the smartest wave of sellers. Then you have the dumbest wave or the dumber wave of sellers, and then the dumbest wave. So capitulations usually happen in waves. And, the first one that we've had lasted around 5 days or so.
Yeah, I don't think they're recording yet.
Down from 60K down to 30. So now I think like the next wave is like the bounce, and probably the next best shorters were in the low $40,000 range. So that's the second best sellers, and that's probably why we're tapping down into the 20s now. And then the next best sellers are going to be whoever catches this bounce. And we might have missed it. We hit 35K like a day and a half ago. So.
All right. We're gonna wrap up the screen share, and we're gonna do a little debate on Bitcoin versus altcoin. Hold on a second. Do you want to record that? with your camera
Oh,
in the
shit.
middle there?
Yeah.
Because lens cap's still on.
Yeah.
The SD card is.
Oh, you guys still.
5 minutes will be done.
Oh, okay, so we'll set up for the live stream. We'll set up for the debate. All right, guys, let's stop the screen share. Joe, are you sticking around for this debate or no?
Yeah, sure. And I'll at least keep some entertainment going while we're waiting while you guys are setting things up. I'll go back to Bitcoin 101 stuff and any questions people have. We've been doing this a lot every day, and I see a lot of new faces, and we love educating people about Bitcoin and the various elements that people should be aware of that they might not be. So if anyone has any questions, we're not live, right?
We are live. We're still live.
Okay, whatever.
We're staying live,
right.
so it's.
So does anyone have any questions that they want to throw at me? Like how many people here are starting to feel a little more comfortable about Bitcoin? How many people know about the Lightning Network? How what's the general sense here? Are we cool? Is there any questions that you want to throw at me? Can someone repeat that for? Yeah, absolutely. Pretty much, I say to people that the only thing that you should put in your child's college fund is Bitcoin. Everything that's not Bitcoin is probably going to die out over the next couple bear markets. We had a pretty big death of a lot of altcoins in the last bear market. A lot of coins that went to zero and probably stayed that way. But then we got, this bubble came around, and what DeFi lasted around 3 months before things were negative 97%, and there was 100 tons and tons of coins. So I think each system, each bull market or per little sector is going to be interesting and have its little, idiosyncrasies. But I think overall, I'm not putting anything in my kids' college fund except Bitcoin, because I expect all those things to death spiral and be worth nothing. Any other questions? So I want to go back to the Lightning Network then. How many people here, by show of hands, if you're comfortable, how many people know anything about the Lightning Network? It's actually pretty good. Okay, so about half the people. So a lot of people know about Bitcoin, and I'm pretty sure you've heard arguments about Bitcoin being expensive and slow and all that stuff, right? Roger Ver type arguments. So one of the important things that I feel like is what we need to include into Bitcoin 101 kind of teachings now is Lightning Network usage. We need people to be able to understand that the medium of exchange exists. So as far as Lightning Network is concerned, I'm just going to go over a couple little topics to help you get there and understand it. Simply speaking, there's dual functionality wallets. Back in the day, if you had a wallet on your cell phone or particularly cold storage, you really only had on-chain storage of your Bitcoin. And Lightning Network was really difficult to integrate into your node that you had to do on your laptop, and it was really difficult work for idiots like me. So basically, you can download stuff like Blue Wallet now, which is a wallet that'll have dual functionality. So you can download Blue Wallet, you can send Satoshis on the Lightning Network to another party, and it's instantaneous. I was doing this yesterday, showing people I was literally sending 1 Satoshi to another wallet, and it was a 0-fee transaction, and it was instantaneous. So, sure, it's and we had a Twitter handle Impact. It was Ben Woolsey. He's a Bitcoin Core developer. He went all over Lightning Network and explained it in great detail how it works and how the anonymity element remains intact, because each time that it passes on to another channel, your identity is obscured because you sent money to a party over here, but then this party is sending money. So no longer are you sending money to like the 30th man down the chain of the Lightning Network that you're trying to get money to. It's actually money to the next account, to the next account, to the next account. So that's onion routed security as far as anonymity is concerned. So the Lightning Network is also a very anonymous layer to transact. And again, I think it's really a Bitcoin 101 thing that people should be using to transact with. But you need to download a dual functionality wallet, and you need to fund that wallet. And there's 2 ways to fund a Lightning channel. Oh, are we?
Oh yeah, we've been ready. So let's just finish up.
Thank you for listening.
No, I mean, you're gonna finish your train of thought. Hey Joe, can you just clip on the microphone to the base, like the way I did it here.
Ah.
So this way, it's easy to do that. Okay, cool. And all right, so coming up, guys, have a seat. We're gonna have a little bit of debate. Chris, you and I have debated. I think this is like the third year in a row.
How are we setting this up? Just Tone and me and anything?
Yeah, go ahead. Maybe
It's me and you.
yeah, I guess.
On one
Yeah, you and I will split the mic. That makes sense. And the other guys split the mic as well. You can also take it off and just pass it. Like, yeah, perfect. So, but speak like directly into the mic, guys, and just like literally like that, so that the audience hears it as well. All right, so we've been coming here at PortFest and debating the world of is it going to be Bitcoin only, or will there be other cryptos? I say we're going to jump right into it. So we have Jeremy and Chris. Why don't you guys introduce yourselves, but don't just introduce yourselves, also just talk a little bit about your background, what got you here. And yeah, let's just do quick introductions first, actually, and we'll start there.
Sure. I'm Jeremy Kaufman. I'm the CEO of LBRY, LBRY, and Odyssey. LBRY is a blockchain-based digital publishing platform, mainly used for videos. It's used by about 2 million people a day. I'm also on the board of the Free State Project and a pretty committed libertarian. I also have a standing bet against Tone Vays for a full Bitcoin. That what LBRY does cannot be done on the Bitcoin blockchain. So maybe we'll talk about something.
I don't remember agreeing to that bet, but yeah, we can talk about that.
Yeah.
All right, go ahead, Chris.
Chris Pacia. I don't even know if I'm on.
Is it on?
Yeah, it's on.
It's not. You're gonna speak directly into the top of it.
Geez.
Yeah.
I was like, okay. Yeah, I was a longtime developer for OpenBazaar, one of the main people behind that project. Also, I am a full node developer for Bitcoin Cash, kind of helped sort of get that coin off the ground. And yeah, I live here in New Hampshire, not far from Jeremy. And you know, we've been here kind of into Bitcoin primarily because of libertarianism, you know, way back in the day, 2012-ish or so.
All right, and let's Jim introduce himself as well.
All right, I go by Surfer Jim on Twitter. I am a contractor by trade. I own my own construction company for 30 years. And I was introduced to Bitcoin 3 times. And on the 3rd time, it had to do with trust. I was listening to somebody speak and connect Bitcoin with trust. And I built a business on trust for 30 years where I really never had to advertise. And so it hit me real hard, like how is Bitcoin related to trust? And that was my introduction to the rabbit hole 4.5 years ago. And I've just been intensely studying this thing since then and hoping to help pass along the information I've learned to those people who don't yet know it. And so I'm interested in speaking on these panels and hopefully help to educate the public about what we're doing and what's going on out there.
All right, so we're gonna start this way. I guess we'll go with you guys first. It doesn't really matter who goes first. Just I guess explain the logic and reasoning as to why we need more cryptocurrencies in the world, and is there the perfect end? Like how many different cryptocurrencies is a good number, and why did your project decide not to go with Bitcoin, but it needed its own token?
Sure. Sure.
Oh, and what's Odyssey?
Hello.
What is going on with that?
No.
It went off.
Yeah,
it
you
just
gotta
got
speak
unplugged.
directly
No, but
into.
it was no. I got unplugged.
Okay.
So look, what I'd say, I find the sort of Bitcoin versus altcoin like proposition to be like almost trivially ludicrous. You know, a cryptocurrency is a blockchain. All cryptocurrencies are powered by a blockchain. And when I say blockchain, I mean public blockchain. Private blockchains are a joke of a technology. But the notion that the first public blockchain is going to do literally everything is as absurd as saying the first relational database to ever be created, which was created by IBM in the 1960s, is going to be the only database that powers everything. Asking how many blockchains there will be is like asking how many databases there will eventually be. It'll probably be quite a bit. I don't know exactly the number, but you're tailoring the design now. So this is like, is one of these going to unseat Bitcoin as the best, store of value in some of the markets that Bitcoin is winning in? I might take the Bitcoin position on those things. So I'm not an anti-Bitcoin guy, but it's not that hard to make a list of things that cannot be done on Bitcoin. I mean, the list is very long, right? You don't have a stable cryptocurrency on top of Bitcoin. You can't do smart contracts on top of Bitcoin. In the case of LBRY, right? We started with the Bitcoin code base, modified it, adding several different opcodes specifically related to the applications and usages that we wanted to enable. Every database ends up tailored to the applications, right? So Bitcoin is tailored towards maximal security, a lower number of transactions, right? And that's what Bitcoin is designed for, and it's good at it. But the idea that everything can be done on top of Bitcoin, I just think is clearly false. And I'll let Chris maybe take over and talk about some of those if he wants to. But I just think it's very hard to argue that with one megabyte blocks, we're going to be able to power every blockchain-based application, every blockchain-based thing that we want to be doing.
Yeah, I mean, for me, the question of why have other coins, I guess, I mean, the basic answer is just competition, right? We want to find out. I mean, at the end of the day, if we're talking about money and currency, I mean, one is fine, right? But to get to that one, we need some competition to figure out what's going to be that best one, right? Like gold did not exist in a vacuum, right? It competed with many other things over the years to become a medium of exchange or a universally accepted medium of exchange. And it took many, many years of competition to figure out, which one was going to work the best. And, in the cryptocurrency case, we're still discovering new ideas, new technologies, new way of doing things. And I don't know, it seems like a little bit of hubris to say like, Bitcoin, it launched in 2009 and it had everything figured out, and like all these, everything else that would come after it is going to be inferior. I mean, it just seems like you're going to have that opportunity through competition to experiment and see what's a little bit better. The other thing that kind of sort of changed my opinion a bit on this too was, way back in the day, people always used to ask me, well, why, what's stopping like some other coin from coming along and with better technology and out competing Bitcoin? And I always used to tell people, well, like, Bitcoin, if it's a really worthwhile feature, if it works really well and it's proven in an altcoin, that feature could be merged into Bitcoin. Bitcoin's an open source project. You can make changes to the code base. But since like 2014, the whole like block size debate, a large part of that was about really not making any major changes to the code base, certainly not any hard forking changes. And the Bitcoin community and people like Tone really kind of enforced that quite a bit, right? If someone were to propose a hard forking change, I think Tone would be out in full force against it. So like you're stuck in Bitcoin with a basic design, right? You can make some changes a little bit around the edges with soft forks. There's one activating soon, but without that kind of willingness to make sort of hard forking changes, it's possible there could be better technologies that can't be incorporated into Bitcoin. We have to see.
I'm gonna let Jim do the main rebuttals. I'm just gonna comment real quick in that there's two different debates that are happening, right? One of them is the currency debate, and the other one is the everything needs to be decentralized, including the chair you're sitting on somehow needs to be decentralized, and someone will create a shitcoin to convince you that it will decentralize the chair that you're sitting on. That's basically our world we're living in. But the currency side of it is clearly the 150 fiat currencies were not enough to decide which currency is best. And then Bitcoin came out, and people like myself thought that, wow, this is a way to eliminate 150 shitty fiat currencies. And now I'm debating 3,000 different shitcoins because somehow people think that a world with, instead of having 150 currencies before Bitcoin, that we now have 150 fiat currencies plus 3,000 shitcoins and Bitcoin, and we still have to decide which one is best. Is somehow that debate is worthwhile. And the other concept is building things that are being convinced to be decentralized. So Jim, have at it, floor is yours.
My understanding of how a blockchain works, some people might have been here the other day when I did this description. I'm going to do it again now. A blockchain, as we understand it, the technology that powers Bitcoin, is the result of thousands of computers talking to each other. And what they're doing is they're updating essentially an Excel spreadsheet every 10 minutes. So the system itself creates uncopyable digital files. Those uncopyable digital files never leave that system. They are simply copied all over the world on individual computers so that everybody has the exact same copy. So a digital file is created. It cannot be copied because if you try to copy it, the network will see a duplicate and will reject it. So there gets to be only one of these. And to move it, you need a private key. You need to sign a message. And when you do that, the network looks at that and says, okay, we see somebody wants to move it. We see it fits all the rules. We see they have the signature correct, but we're not going to move it just yet. We're going to say it's temporarily spent. And it sits there waiting for confirmation that it's okay to move it. A confirmation comes when somebody mines a block. Mining a block is a little bit technical. I won't get into it here, but once transactions are included in blocks and they're linked onto the blockchain, they become finalized. So all you've done is you've created a system that creates and tracks digital files that cannot be copied. That is the essence of any blockchain, including Bitcoin. The fact that humans give value to those digital files has absolutely nothing to do with the way the system works. Nothing. There is literally no way to tie any of these digital files to the real world without a third party trusting that they will maintain that tag. You have to have somebody from the outside world enforce the connection between the digital file and anything in the real world, except for proof of work. That is, the electricity used to mine a block is knowable by the network without anybody putting in any third-party information. The network can monitor the speed of blocks and determine if they're coming too fast or too slow. And in Bitcoin, there's this really inventive technology, or let's say rule that says, if the network's going too fast, we're going to slow it down. We're going to make it harder to guess the proof of work mechanism. Basically a guessing game. A lot of people are racing to guess the answer to the difficulty factor, which is simply trying to guess a number less than another number. I can get all into that, but I don't want to make it too confusing. The bottom line is we got digital files moving around in a closed loop system. The only way to link them to the real world is through the electricity used to create and move them around. That is it. You cannot connect one of these digital files to the real world without a trusted third party. So when they say this is going to do X, Y, or Z, think it through and figure out how is it going to actually do that without somebody enforcing that other than the system itself, which in Bitcoin, the system runs all the rules automatically by itself. Nobody else has to do any input. If you try to put incorrect input, the system will literally just kick you off. So I can't fathom for the life of me why we need any other than one blockchain. And if we're going to use it as money, we need to value those files. And the world has spoken. Those files had zero value 12 years ago. And the really good files, the Bitcoin ones, are worth over $30,000 right now for a single file. The world has decided that this network is going to be the best network to deal with this thing called value in the form of digital files, right? Without a central party to keep track of them all, there's no other way to do it other than what Bitcoin is, a decentralized nature that has got network effects around the world. And because of that, it's highly unlikely, if not guaranteed, that no other digital cryptocurrency, call it what you want, will ever overtake Bitcoin as the best network to store value on. To say that this network will do anything other than move digital files around that humans subjectively give value to is disingenuous. It's impossible without a trusted third party. I would love to hear these two gentlemen explain to all of us how their tokens, how their blockchains, how anything they do can do anything different than Bitcoin, can tie anything in the real world to those digital files. And if they can show, in the case of Bitcoin Cash, which is almost identical to Bitcoin with certain changes, I would almost give credit to them and say that their blockchain works identical. But the world has spoken and said, we don't trust the guys that run that chain. There's not enough of them. They can change the rules much easier. And so we're going to put our value on this Bitcoin blockchain. The LBRY token, I see no reason to have it. because it's centralized. He's already been subpoenaed by the government, and they want to drag him into court. So it's clearly not decentralized. So I'd love to hear how these guys can take these digital files and do anything other than move them around in a closed loop system. Thank you for your attention.
Sure. I mean, so is your opinion that Ethereum is not decentralized?
Yes.
Not at all.
Okay. So Bitcoin.
Yes, that is our opinion. Actually, it's factually not decentralized based on what happened in 2016 with the DAO hack.
So can you define decentralized then? Can you give a positive definition?
Sure. To me, the decentralization is it's the combination of decentralized development, how many smart developers are actively making the database, the miners that are using that code, and the number of nodes that are self-validating those transactions. Now, to me, having a dozen nodes and 2 miners that could collude together to alter stuff, and in the case of Ethereum, there's actually, why is my camera? Hold on. 1 second, guys. There we go.
Yeah, well,
look, in the case of Ethereum, they want to get rid of mining, the only part of their blockchain that is actually giving them decentralization.
yeah. Well, my understanding is Ethereum is moving to a hybrid model, not pure proof of stake. But look, in my case, sure, the government's suing me. The government could sue any of the public Bitcoin developers. The government can sue everyone. The government is not alleging that they can shut the LBRY network down. They're not. They're not even trying to. They already understand that they can't. It's not possible to shut the LBRY network down. It's very difficult to shut down any.
Where are the videos stored?
The videos are stored in a peer-to-peer network similar to BitTorrent. So you write metadata to the blockchain, and there are specific transactions related to that metadata. Our blockchain maintains a parallel Merkle tree mapping identities and names to metadata. We're computer scientists who published a real white paper, a real one that was accepted by IEEE, one of the most prestigious engineering conferences in the world. It's been looked at by the best computer scientists in the world. They've all agreed that this is novel and cannot be done on top of Bitcoin. LBRY is not trying to be the world's reserve currency or the world's best store of value. We're not trying to do that. I see blockchain as an empowering technology that allows us to build and do different things. I think it's great that we can have this new form of money or currency or store of value in Bitcoin, but we can do all kinds of things with blockchains. We can do smart contracts. We can do stable coins. We can do futures markets. We can do decentralized data networks. Like, the amount of things that can be built is incredible. And I don't even see how you can, could you make a positive case out of all of the different things that are being done in blockchain? And I can list more, how these can all be done on top of Bitcoin and it's 1 megabyte block size. Like, I don't understand how you could possibly make that case possible.
You just said that the videos are stored just like BitTorrent. So where's the innovation? What makes your project different than BitTorrent, which has been functioning before Bitcoin without its own money?
Right. So BitTorrent has no catalog, so there's no coherent view of the Bitcoin network. The LBRY blockchain provides a coherent view of the content that's available on the network. BitTorrent has no sense of identity, so the LBRY allows the creation of handles, which then sign their publishers. So you have proof of identity related to who published the content. And the BitTorrent system has no concept of payment coupled with distribution. So LBRY was conceived of as improving all 3 of those things related to BitTorrent, because a public blockchain allowed a better form of BitTorrent that could be built because of the discovery of the idea of a public blockchain.
And you couldn't do it as a side chain of Bitcoin to store the linking of people's identities to their videos? You needed to build your own blockchain for that?
You cannot, I don't know what you mean by, quote, do it as a side chain of Bitcoin.
On the Liquid sidechain, for example.
I don't believe the Liquid sidechain existed when LBRY was started, but I don't think that you could do it on the Liquid sidechain.
I don't know. But Liquid is also sort of more like a federated model rather than like a purely decentralized one. But I mean, I'll just point out to kind of answer the question, like, what could you do on moving value around on a ledger? What, why are these other chains better? What can they do that's better than Bitcoin? I mean, let's be honest with ourselves. I mean, Bitcoin's slow, right? Confirmations take 10 minutes to get a confirmation, sometimes longer. Sometimes your transaction goes multiple blocks without confirming. Then you have to wait upwards of an hour or longer, even after it confirms, to kind of make sure that it's deep enough in the chain so it can't be reversed, right? So we have very slow transactions. we've got very expensive transactions. The more people who transact on the network, it's going to start pushing up those values. And of course, it burns a ton of electricity, right? So you have those three properties could certainly, it's not impossible to conceive that we could improve on them, right? Now, has anyone been able to improve on those properties in a sufficient way today? They've done so by introducing like different sets of trade-offs. And you might think that those different sets of trade-offs are not as good as the trade-offs made in Bitcoin. That's a fair argument. But it's not inconceivable that someone might be able to, improve on those three areas: the speed, the price, or the fees, and the electricity usage, and do so in a way that presents a set of trade-offs that's actually better than Bitcoin, right? Like, I think it's quite a bit of hubris to say that that's like never going to happen. There's some really advanced cryptography out there that's really interesting with zero knowledge proofs and stuff like this. You can build like really compact blockchains that just validate really quickly in some very small amounts of data. And you're not going to be able to incorporate that into Bitcoin without, doing some sort of like serious hard fork if you were in the future. So it's not, in terms of like, is it possible to move value around in a way that's strictly speaking better than how Bitcoin moves value around? Theoretically, it is, and we'll see if that happens.
I would have to say that when you study the history of money, money is simply a construct, right? It's not an actual thing until humans make it such. Humanity figured out that in order to get away from barter, we needed something in the middle that we can all value. And so money, the construct, was thought of, and it was reduced down to physical items, multiple different physical items over all of human history. And then humans kind of started to realize that money works best when it has very specific characteristics like scarcity, fungibility, uniformity, divisibility, a bunch of things that we have come to realize that if you're going to use this thing called money, it needs to store that value. It needs to be portable so you can move it around. And we came to realize that the best thing that did this was gold. And mostly because it's the most scarce asset that also is divisible, fungible, doesn't rot away from rust or something like that. But gold had its challenges being adopted as a money. Even though it had all the right characteristics, it took thousands of years. And people tried to interrupt it by introducing other things. Debasement took place. There's all kinds of things that were done to this thing called money, so some people could get an edge over their fellow humans. But ultimately, the principles that drive what is a good money don't change. And so Bitcoin was invented to be a different money that would have all the good properties of what we came to realize as money, only in a digital form. But it was understood that this could only be done if it could act like a rock in the ground. It literally cannot be manipulated by one group or one person, just like gold can't be. And so the Bitcoin network was developed around these concepts, and it's worked. It is truly decentralized. That is, no one person or one group or even a government can stop it, change it, turn it off, or stop you from using it, whether you're a criminal or not. And that's the properties of something like gold. It's also the properties of silver and copper and all kinds of other metals, except that those other metals don't have all the best qualities of money that gold has. And so what we're debating here is simply, will any of these other cryptocurrencies overtake Bitcoin as money? Now, if you're going to say that this blockchain technology can do things other than money, you're back to the argument that if it's going to do something other than money, it needs to have a way to tie that to the real world. Because in order for it to be money, it simply needs to be a closed loop system like Bitcoin is. Because the money portion of it is simply the value humans give to it. So these guys can have their other tokens, and some humans can value those other things. And they can act just like money. They can act like something that's moving value around to get you, some membership in a club or whatever, because you own this little token. But the chances of them ever becoming money are close to zero. And the use cases that they want to provide don't need a blockchain, as far as I can tell. I have seen no reason to have a closed loop system that moves uncopyable digital files around other than for it to be money. I just can't see it. And these guys have not convinced me. Now, I'd love to hear what is a smart contract? What's so smart about it? And what is being contracted? The only way you can have a smart contract in this ecosystem is one that says, we have this thing, this file, that humans have subjectively valued, and the smart contract is going to dictate who gets it and when. That's all these smart contracts can do, and they're already all over Bitcoin. Bitcoin does it every day. So there is no smart contract out there that is going to do anything different than move a digital file around automatically based on the preset rules when that contract was set up. If you're going to tie that to the real world, you need that trusted third party. So I see no reason to have a blockchain for anything other than money, and we have the best one. The network effects prove it. It's also the only decentralized blockchain on the planet. Literally, every other one doesn't have the network effects, doesn't have the developer base, doesn't have the cyber hornets defending it. Literally, there's millions of people on this planet that are not going to let Bitcoin die and don't give a crap about the others. So they got a big uphill battle to become money, and they won't have anything worthwhile to serve the public as a blockchain that can't be done without a blockchain, in my opinion. But Jeremy seems to not believe me on that one. He thinks that his library token can do all kinds of fancy things that a pure blockchain can't do. He's got a blockchain. I'd love to hear what it does other than move digital files around.
Well, it seems like we're having a little bit of two different debates here, because I'm not trying to supplant Bitcoin. I'm not trying to compete with Bitcoin. I don't want the library token to be used as a currency for the most part, right? Like,
but then why is it? Like, then if you don't want to use the currency, why does it have a fluctuating value and people speculate on it? Because that is the reason why everyone that creates a token ends up with a letter from the SEC, and then they want the community and us to defend you when we're telling you that's what's going to happen.
Yeah, look, I mean, if you want to be on the side of the government interfering with voluntary exchanges, I mean, that's an interesting position to take here. I don't know why you would side with the government on that.
Well, because Bitcoin was created because too many countries were printing their own money, and now every single person at this campground just wants to print their own money. How is that different?
Well, I mean, free banking and competition in currency provision is a good thing. It's how things remain competitive. But we're getting off from the core issue here, right? You're coming at this from, all that I care about is this new form of digital money, and Bitcoin is the best form of digital money. And I'm not really interested in debating that. I think Bitcoin is the best form of digital money that exists right now. And I'm coming at it from, a public blockchain is a new type of database. It's a way of storing state that is not controlled or owned by one party. And so we can use that to do all kinds of things.
What thing? What are you going to do with it? What does the library token do?
There is no coherent view of the BitTorrent network. There is no coherent view of other peer-to-peer networks. The library blockchain provides both a coherent view of a decentralized data network. And when I say coherent, I mean you have the whole listing. You have a decentralized network with an agreed upon listing of what's available on the network. Think about if you go and find BitTorrent files right now, right? You're going to centralized websites. There is no decentralized index of content available on the BitTorrent network. A blockchain provides a decentralized index of content that's available.
Okay, so you got a blockchain with a decentralized index. What's a token do?
That you need the token to perform transactions onto the blockchain.
So what's the transactions?
The transactions are transactions that either allow you to make an entry and record that this thing exists. The transactions allow you to create a handle, and that handle can then be used to sign other transactions and prove that you published.
So you're forcing people to buy your token. Wait a second, hold on. Yes, you are. You're forcing, because in your system, they can only get permission to do these things with the library token. Is that correct?
And the same way that McDonald's forces you to give them money for a hamburger, yes.
Whoa. McDonald's doesn't force me to use Japanese yen.
Nor do I force you to use library token.
McDonald's doesn't force you to use McDonald's stock to buy their burgers.
There
you go.
Okay, please make a positive description of how you can create a system with the properties that I've described without doing what we've done. I don't think that it's possible to do it.
All right, so all you're saying is that we've got this great system. If you want to join it, you got to use our money, our value storage transfer system called LBRY. So you just made another Chuck E. Cheese token that people have to use in order to interact with your system. You could have just had them use Bitcoin.
You can't.
Why not? Why not? It has value. You can transfer it around. You could link it to your BitTorrent system with real money, not fake library token Chuck E. Cheese stuff. It's okay. I have no problem with the free market at all. And I think these guys should absolutely continue to do what they're doing. The market will speak. They're only all they're doing is moving uncopyable digital files around within a closed loop system. They're giving it value. And he's saying you need our digital files to operate in this ecosystem. Most people are not going to have 100 different monies to operate within 100 different private little ecosystems. They want one money. We have it. It can be incorporated. He just doesn't seem to want to figure out how.
Look, the way a blockchain works, right? Like technically under the hood is you need a token to incentivize the maintenance of this ledger, right? Like you can't have a blockchain without that token for the incentive. So if you're...
Yes, we agree on that.
Okay,
You cannot have that blockchain without the financial incentive. That's the point, right? There are many things we cannot do because we cannot afford them. I'm sorry, but I don't believe the solution to you not creating something because you can't afford it is to print your own money to do it. I just don't see how that is the solution, and that has been the solution since the Bitcoin white paper. Yeah. Everyone else has been just printing money to do it.
But Tone, would you say like if they can't make it work on Bitcoin, it just shouldn't exist at all?
Just don't print your own money. Just don't print your own money. Why is that so difficult?
I'd love to hear finish your explanation.
I mean, that like to make this system work, it needs to have a token for the incentive purpose, right? And like if you could do something like use the Bitcoin database to like register like names and have like this mapping between files and names, you know, I'm sure Jeremy would do it on Bitcoin, and then but like the actual like architecture of Bitcoin doesn't allow for those type of use cases, right? I mean, you can do things like put your money in a multi-sig address where like 2 of 3 people need to agree to remove it from there. And then once it's in that multi-sig, you can treat it as like a quasi-custodial thing like Liquid does. But that's not the same as like a genuine decentralized network. Like you agree that like a 2 of 3 multi-sig wallet doesn't provide the same degree of decentralization as like the whole Bitcoin blockchain, right?
Well, a multi-sig is simply the locking up of some UTXOs with some rules, and it has zero to do with the decentralized network. It's on the decentralized network.
Well, exactly. But something like we're talking about like side chains. Like why doesn't he do it as a side chain? And it's basically because what would be happening is Jeremy would be in control of the keys or one of the keys or whatever to this multi-sig, and then he'd have his side chain. But ultimately, at the end of the day, like Jeremy and whoever else owns the keys could just take the money out of that multi-sig and steal it, right? So he's trying to build a network where you don't have to trust him not to steal people's money. You see what's going on?
I understand what you're describing, but in the end, you're still creating a system that in order to, going back to what you said, the closed loop system of Bitcoin, the original blockchain, gave the people who ran their computers using electricity some digital files that had zero value at the time when it started. So these guys are spending real world money on electricity to create these brand new Bitcoins. So the system within itself creates these Bitcoin, these uncopyable digital files. It's because humans gave them value that other people said, maybe I want some. Maybe I'll go try and mine some and get it for free out of the network. So this system grew from nothing in the wild, and a very, very small group of humans start to see what it could be. As soon as it started to gain traction and these digital files had actual value that people wanted them, trading started. The system is completely copyable because it's open source code. So somebody says, wow, I watched that Bitcoin price go up. If I make one just like it, maybe people will join my network and I can gain. And that's all the rest of the shitcoins are. They're a copy of Bitcoin trying to do what Bitcoin did, the Immaculate Conception. If I get it when it's 2 pennies and I sell for $30,000, I will be ultra rich. So ultimately, every shitcoin is trying to compete with Bitcoin based on the technology. I see you shaking your head no. You can ask any question you want. I'd love to have a discussion. The point is, you still got a closed loop system that creates and monitors digital files that can't be copied outside, without breaking the rules of the system. And everybody wants to jump on the bandwagon. And so again, these guys have not shown to me any reason why they need a blockchain to connect to these real world issues, because all they're really doing, they're talking, you said it.
You need that to incentivize. That means it needs to get value. That means humans have to give it value. That means you're in competition to value uncopyable digital files. So what is it you can do with those uncopyable digital files that Bitcoin cannot do right now or in the future?
I mean, I'm going to give it to Chris here in a second, but I think this is the problem of having a computer science discussion with someone who works in construction. You've heard the arguments made several times. They're vetted by people who know way more than you that these things cannot be done on top of Bitcoin, and you're just like plugging your ears and saying shitcoin repeatedly.
Well, tell me how they can be done. You haven't done it.
I already have.
No, you haven't. You have not once explained. You have not once explained how your library token is needed because it's got some value, right?
There are several unique transaction types specifically designed and created. I mean, I can get in finer grained detail, but they're specifically designed and created for the storage of metadata and identity on a public blockchain that cannot be done. We have a parallel Merkle tree. You have the same Merkle tree that Bitcoin has related to transaction outputs. Our blockchain maintains a parallel Merkle tree related to names and handles to their associated metadata so that SPV wallets can perform metadata and resolution lookups in a trustworthy way without a full copy of the blockchain. We took the same property that Bitcoin had and applied it in a new and different field, not trying to be money, but trying to provide this global register of digital content that's not owned or controlled by any one party. And this cannot be done on top of Bitcoin without substantial modifications. And this is a consensus opinion of academic computer science experts. I mean, I don't know. It's like, I don't know how I can debate you on this further because I don't really feel like you're understanding what I'm saying.
Jim, what year did you get into Bitcoin? I'm just asking.
4.5 years ago. You guys have more experience than me.
No, I'm just asking because when roughly 2012, 13-ish, I think that's probably before you were in, people wanted to do all this stuff on Bitcoin. A lot of people had the mentality that we only want one. People didn't like that there were other coins popping up left and right. Okay. I wanted to do stuff on Bitcoin. Jeremy if Jeremy could have done it on Bitcoin, he probably would have. A lot of people wanted to only use Bitcoin, right? We didn't see a need to have all these other coins. But the reason people started creating something like Ethereum, Vitalik wanted to do Ethereum on Bitcoin and ultimately ended up making his own chain. It's people wanted to do this stuff on Bitcoin when they found out they can't and that the system was not going to change in ways that would allow them to do it, the things they want to do. They said, okay, let's create a new system. It wasn't like they went out and said, let's start our own money to get rich. Some people did that, of course.
No,
right?
I think
There's a lot
everybody
of people. Okay. But a lot of people also just said, here's this really interesting thing that we want to do and we can't do it on Bitcoin. So let's create another chain where we can.
So I got a question. We are going to go to the audience questions. I mean, we'll save some time for that. So my view is this, the reason why it wasn't built on Bitcoin is because they wouldn't have the money to actually build on Bitcoin, and you have to create your own money in order to actually pay people to build something. And it's a lot easier to create it than to borrow it or to just put in the effort and do it yourself. A lot of projects are being built out on Bitcoin. The reason Sphinx Chat, which is built on top of Lightning, and others that don't require BTC Pay Server, was built without printing your own money. It just takes a while because obviously it's a lot harder to build something when you can't print your own money to fund the development. But my question is, how is LBRY different from Steemit? And how come no one uses Steemit anymore? Because Steemit was very, very popular as a decentralized version of Reddit. And until it kind of sold itself to Tron and Justin Sun.
Well,
so how is LBRY different?
That might be why no one uses it. As to how it's different, I don't know enough about. Was Steemit ever actually decentralized? As far as I know, you could only ever access it through a website. Were there decentralized peer-to-peer applications?
Are LBRY videos not accessed through a website?
You can access them through a website, but you can access if you download LBRY Desktop, you can discover content on the network. You can publish content to the network. You can access content on the network. You can do that entirely anonymously without interacting with my company, without sending any analytics to us. So it's quite equivalent to downloading uTorrent and accessing something, except you get a much better UI, you get a much better presentation of something, you have the ability to pay people. None of this was possible before we created it. And like, we're gonna go in circles
The
on whether or
ability to
not you can
pay,
do
the
this.
ability to pay people in what?
You can pay them outside of the system, so they can put information about paying them outside of the system, or they can be paid in the library token.
Right. So they're being paid in a so is library token a currency?
I mean, these get into definitional arguments about whether what a currency is. Like gold may be, if you think gold is the best reserve currency or whatever you want to call it, that doesn't mean that someone can't accept silver or platinum or other things. And like part of what you're arguing is that Bitcoin, if Bitcoin is the best, therefore nothing else will have value. I'm happy to accept that Bitcoin is the best. All kinds of other things are going to have value if there's a useful reason to have them and to use them. So, yeah. So
if people are paying each other in library token, are people holding library token as a potential store of value? Because if not, then isn't it like the only incentive, like the Venezuelan currency, if it's not meant to be used as a store of value, then shouldn't you immediately try to get rid of it, or it would get devalued, or it would lose its value? Like,
yeah, look, I care much more that the network works than what the value of the token has, right? I set out to create a new way of interacting and publishing information, not to create. I'm not trying to compete with Bitcoin as the best digital store of value or the best digital money. In terms of why the token has value, in addition to using it to publish content or to do other things, there is also a staking system that relates to trust and discovery. So there is an additional incentive you can use that token and point it at other handles and identities.
Okay, so I accept these gentlemen's perspective on this, and I absolutely agree that everybody should be free to do whatever they want. I also accept the concept that people will value these other blockchains because they believe they have some value. That's us humans subjectively valuing all kinds of things. So they're probably going to exist for some period of time because there'll be a lot of people that will want them to sustain themselves and keep that value because they own the token or whatever. What their long-term goal is, it's hard to say. But if you've got something that's acting as a money, you have to decide how good is it as a money, something that stores value. I mean, many of us have airline miles, but they can only be spent with the airline. And his library token can only be spent on his platform, basically. I mean, I can send you some library token in payment for services if you value it enough, so it doesn't have to be on his platform. But understand, you're using a type of money that's controlled within a very small system, small group of people. It's not worldwide decentralized like Bitcoin is. And in the long run, do you really want to hold your airline miles to retire on them one day, or your library token or something else? So in the end, we got the same thing. We got blockchains moving digital files around that people give value to. Jeremy believes that his token provides additional value beyond just money, and maybe it does. And for those people who want to use that system and they have to change some money into the library token to use it, maybe that's super valuable and humanity should have that. And I give him a lot of credit for trying, and he should continue to try. But everybody should understand that these are simply uncopyable digital files moved around within a closed loop system where people are trying to link them to other things. You are simply going to own lots of different monies if you want to own lots of different cryptocurrencies, and they all will be limited in some way to who will take them, where you can use them. We are trying to build a universal money for all of humanity that everybody can settle on, like gold used to be in the digital world. And so we're hoping that Bitcoin turns into that. I believe it can, and I do believe in a few generations it absolutely will. And most of these other things, some of which may still be around, may hold some value, but most of humanity is going to realize that we need to move value around in one system because money always converges to one thing when all people start to really understand it. We've been screwed by governments for decades, believing that anything they tell us is money is actually good money. It's not. Many smart people have figured out what makes a good money. I believe, as do many people around the world, that Bitcoin is the best form of money we've ever seen, and nothing will overtake it. So all these other cryptocurrencies could have value, and you can use them, but there will still be one dominant one that the world will converge on, in my opinion. Thank you for listening.
Yeah, I mean, I'm not real. I don't think I'm speaking very much across purposes to that because we're not in any way trying to supplant Bitcoin as the instrument of choice for digital money. Library has value because it's similar to the reason that any other commodity has value. Gold has additional value beyond its commodity purpose because it's a consensus choice to use as a financial instrument. All kinds of other metals have value because you can use them to do stuff. The LBRY blockchain provides an interface, provides an ability to do things that can't be done via other systems. As that system grows, it becomes even more and more useful. I never suggest that anyone invest in LBRY or buy it the way that they buy Bitcoin. Is it worth buying $5 or $10 worth? Because that's going to be enough to let you have an identity and do whatever you want to do. Like, it makes sense to buy it because you can use it and has value for the reason that wheat has value, not because we're trying to be the number one, digital currency or digital store of value.
I don't know, to an audience question, and maybe we'll take a couple of questions from the audience. Go for it.
So you said yourself, Jim, right, Jim, that people have to give a thing value, right? And I have a personal belief that all value is belief. And all of us make up different communities, Bitcoin being one of them. And it could be, as you described, this one convergence of reserve world currency. And no, I don't think anybody's necessarily opposing that. I don't hear any opposition to that. I think the thing that everybody's trying to get you to see is that there are other communities who want to do other things that can't be done on top of Bitcoin that we all wanted to do. And what you're seeing is the proliferation of a free market, of competition, of ideas for where our value should sit based on communities. You disagree with anything that I just described?
No, I don't disagree that people should experiment and they can decide where to put their value in whatever system on this planet. I have no problem with that. I simply have a problem with most of the cryptocurrencies out there. And I don't know enough about LBRY Chain or Jeremy to really push back on his belief that it cannot be done with Bitcoin in some way. And I am not technical enough to really argue that point. But what I see happening is a lot of pump and dump scams with this concept of a blockchain. You agree, apparently. Right. So what I see is the slowing of the adoption of the best form of money that humanity has ever seen because of this distraction. So it bothers me. That potentially is hurting a lot of people because they're not getting the truth. They're being told this is equivalent.
That's because people need to be more resilient about where they put their value. They need to decide for themselves where they put their value.
People need to ask more questions about where they're putting their value. Look, it's impossible for us to review the details of every single one of 5,000 altcoins out there. And LBRY token is no different than a randomly chosen token. That's number 560 or number 3,000. It is true.
Whether or not it is valuable, that's what minds do. That's what collections of minds do in community.
What we have seen so far is people more interested in printing their own money, because see, here's the difference, right? Like Jim and myself, we're in it for Bitcoin till the end, basically. We're in it for Bitcoin till the end. Either we go fully broke, or we're trying to change the world for the better with Bitcoin. But with all these other projects, with all these other projects, when the LBRY token goes to zero and a lot of people lose money, the creator of that token goes, oh, well, I'll try it. I'll go start another shitcoin and I'll get rich twice.
This gentleman is saying we don't get to choose which token gets accepted by the world. And he's right. He's right. He's absolutely right. We up here do not get to choose. We simply believe the world will eventually come to the realization that this is the best choice.
That's what you believe.
That's what I believe. Absolutely. And there's very technical. Absolutely. All value is subjective. I get it. Yes, I know. We get to choose. And you can continue to choose an inferior money for the rest of your life. You can. Of course it is. Of course. And I'm not arguing against your position. Hold on. I'm not arguing against your position. I simply believe that over time, it will be proven that Bitcoin is the best form of money, even if 1,000 of them also. Wait, the competition slows down the leveling of the playing field for all of humanity.
That's what a free market looks like.
you are getting very angry because we are trying to explain to you that playing the lottery is not the best way for you to get rich. We're not getting angry. You are getting angry. You're getting angry because your lottery ticket, you're getting angry because you feel that we are preventing your lottery ticket from cashing.
So I've been into Bitcoin since 2013, like so many of you guys. And for me, it's all about usability, and I want to do anarchist shit with my friends. I have a question I'd like all of you guys to answer if you're able to. If you're able to answer it, what's the most anarchist or no anarchist thing? What's the coolest thing that you've spent cryptocurrency on before, and what cryptocurrency did you use?
Oh, that's not fair.
Yeah, Chris. What Chris thought?
I don't know. I mean, because you guys know I worked on like Open Bazaar for a long time. So I mean, people were doing some cool things with that at some point. I mean, I did buy some weed off of Open Bazaar at one point. So I built the platform and then used it to buy weed. But so that's probably it. I mean, in terms of what currency, I mean, it probably was Bitcoin. I don't remember back in the day, but like, I mean, that kind of goes back to the other thing. I did not want to make Open Bazaar multi-currency. I wanted it to be Bitcoin only. And I really kind of like fought that. I didn't want to have to, I mean, it was like, it took a lot of my development time to introduce other currencies. And like, it's just a worse user experience to have to mess with multiple ones. The reason we had to add it was because like, no one was going to use the platform when fees were, this was like 2017, and it was like the average fee blew out to $100, right? Yeah, it's still pretty high today. And so like, it was almost forced by necessity to add other coins, and even though I didn't really want to.
So I'm not going to plug LBRY with this answer. So I'll say one of the cool things you can do on Ethereum, but not Bitcoin, is interact in various futures markets. And so this is basically where you're making a bettable prediction about future events. I think futures markets are one of the best ways we can get knowledge about the future. It applies the properties of markets to predictions about the future. And so you can do that on Augur, among other systems, which is built on top of Ethereum.
So basically manipulating value.
Do you know what a futures market is? Do you want
Yeah,
to?
that's a guess on the future of a value of something.
Not really.
It's not.
I mean,
It's a prediction. It's a bet on the future of something.
It's betting on a
that
prediction.
is. Yeah. And what is the bet? What is it worth? Value.
Well, you can bet. It depends. You can bet on any number of things. So there's propositions like anything. Simple ones would be like, who's going to be the president in 2024? And so you can bet that. You have share prices.
Bet. Thank you. Value.
Yeah,
it's all about value. All of this is about value.
I'm sure you think you're making a point.
Well, tell me how it's not about value moving around.
I don't know what you're saying. Of course, value is involved. I don't know.
Okay, so value is involved. So do we need 500 monies to move the value, or one, or two?
I'd be happy to use a Bitcoin-based futures market. Where is one? Where is it?
Build it. You don't have the money to build it, so you have to print money to build something.
No, someone built this. They built it on Ethereum because Ethereum was a better technology for doing this than Bitcoin was. You can go use it. You can go interact with it. Right
do you know what a discrete log contract is?
Discrete log contract? I don't know. The point is, it exists on Ethereum. It doesn't exist on Bitcoin.
Okay, so it actually does. It's happening right now. The development is out there to do basically what you said on Bitcoin.
Where do I go? Where?
Everything takes time. The stuff that you guys support.
No, something's died.
Augur's already running.
Okay.
Because there's not enough value.
What's not enough value?
2,500 other shitcoins have already died because they didn't have enough value, and most of them have value as long as there are people pumping and promoting them and advertising them. The moment that stops, that project dies. Every single blockchain dies once the creators of that blockchain go away, except Bitcoin. Well, they have a new one, right? Dogecoin did die. Their mining died, so they're merged mined with Litecoin. Dogecoin died. Elon Musk brought it back. No one cared before Elon Musk. Like every one of these things are basically as good as the leaders and the advertisers of those things. There actually is not much inherent value. That value just gets pumped as long as there are people pumping them. Every time Dan Larimer leaves his decentralized project, it dies.
He said you don't think institutions are pumping Bitcoin right now. Those who believe in anything are going to pump it. That's the way of the free world, right? So you guys want to pump the stuff you believe in, and you're doing it. I hear it from the crowd. Tone and I are here to pump Bitcoin. I don't see it that way. I'm simply here to try to convince people that it's the best place to store your value for the future. I don't believe people are buying Augur tokens or library tokens or anything else to store value until they retire. And so we're talking about value here. And if you need to use this token to interact with a closed loop system that token is required for, and you value it and you want to interact with that system, then you obviously need to get that token. You need to spend some other form of money to get it. It might be Bitcoin, it might be US dollars, doesn't matter. You're simply moving your value into one system that requires you use that little, their coin, their money to operate in their system. What Bitcoin will eventually do will be the base layer for all value transfer, and everything will be built on top of it to the extent it can be, and not affect the Bitcoin blockchain underlying. That is, I hear people talk about the block size and transaction costs and everything else. One of the factors that require that to be the case for Bitcoin is so that anybody on the planet can run a full node and verify their own transactions. When the blocks are too big, the blockchain gets too bloated, and people will never be able to know the entire ledger. And so the developer community recognizes that we need to build scaling on additional layers and let the Bitcoin base layer remain unchanged so that everybody can participate and no one can keep them out of it, because the system got so big they could not join it. You cannot run an Ethereum node right now. Try. Good luck. It's a completely centralized system, and every token built on it is centralized to that one underlying Ethereum protocol. And there's nobody on the planet that even knows how many Ethereum are out there, and everybody on the planet knows exactly how many Bitcoin are out there. It's just fundamentally different. What's the question? I would never use crypto because I don't own it. Hold on. Yo, let me finish. You want me to answer your question? I'll answer it. Well, hold on. Hold on. I own Bitcoin because I'm storing value in it. I have no interest in spending it now. I have enough shit fiat money to spend. And I'm not going to turn that into some other token just to spend that value somewhere else. I don't need anything that these other tokens offer. So if I really did need something the library offers, I guess I'd have to buy some library token to get the value that his system wants to give me if I thought I needed it. Right now I don't need it, so I don't care. But I don't need it as money. It's acting as money right now. It's storing my value, acting as money. That's what money does. It's literally working for me every day.
There's nothing cooler than Bitcoin. So therefore, there's absolutely nothing that I bought with Bitcoin that's actually cool.
Anything I need to buy, I can use my shitty fiat money, but my shitty fiat money is not going to go up in its purchasing power over time. Bitcoin is money because it stores value. That's what money does. Bitcoin is also transactable right now all over the world through all kinds of platforms. You can turn your Bitcoin into dollars right now, and
We got a line, guys. A lot of people ask questions.
I had no idea that was a line.
Yes, here at PorkFest, I've used Bitcoin Cash to buy several things, less than a penny transaction fee. Anyone here use Lightning Network here at PorkFest? 2 people? Yeah, yeah. And, yeah. And how much does it cost to open up a Lightning node? Thank you.
If I had Bitcoin Cash, I'd be spending it too because I wouldn't want it. Look, the claims that Bitcoin Cash, Bcash, doesn't matter. The claims that it's faster and cheaper is actually kind of crazy. So the faster part, it's not actually faster. because the security of it is significantly smaller. So while one Bitcoin confirmation may take 10 to 15 minutes, one Bitcoin confirmation is enough. If you send your Bcash to an exchange, they're going to wait 6 to 10 confirmations to get the same security as Bitcoin. So the claim that it's faster is crazy because the security isn't there. The cheaper claim is completely disingenuous. In every single blockchain, if you can call them a blockchain, the fee of sending the LBRY token is calculated in the currency of LBRY. The fee of sending a Bitcoin transaction is calculated in the Bitcoin, in the currency of Bitcoin. A transaction fee of Bitcoin Cash is calculated in the currency of Bitcoin Cash. The value of the smallest unit of Bitcoin, the Satoshi, is 100 times more valuable in dollar terms than the lowest unit of Bcash, which I call the Vays. So if the SAT is 100 times more expensive than the Vays, by default, a Bitcoin transaction fee is 100 times more expensive than a Bcash transaction, right?
That's not the reason, Tony.
It's one reason. Well, the other reason no one uses it, so the blocks are empty.
Well, I mean, I haven't looked recently, but Bitcoin Cash was doing the same transaction volume, if not more, than Bitcoin. Certainly, I haven't checked.
That was one Bcash address was responsible for 50% of all global transactions. To make it look like it's actually being used.
But just let me kind of address the idea of like, well, you need the, the fees are a byproduct of we want to keep the ledger decentralized. This was a running debate among developers, right? There wasn't a consensus among developers. There is a consensus among Bitcoin developers today because they drove out all the developers who disagreed with that, right? Including myself. And it was a lot of other developers. I mean, we've done experiments on Bitcoin Cash where he's talking about we needed to keep the block small so everyone can run a node on their home computer. We've done Visa scale on a Raspberry Pi, okay? Visa scale transactions on a Raspberry Pi. If you're worried that like you can't, if you had this high transaction volume, everyone wouldn't be able to run a node. I don't know what's more decentralized than saying we can do this on a Raspberry Pi. So, I mean, just the argument, nobody bought that argument that like computers can't handle that level of transaction volume. Yes, they can't handle all transactions in the world today. But when we've got a Raspberry Pi doing Visa scale, that's a lot, right? Like my laptop is substantially more powerful than a Raspberry Pi. You can imagine it's going to be able to do even more than Visa scale. So if I can do that from home, I'm hard pressed to see where we're losing decentralization. Yeah, we couldn't get every single financial transaction in the world on a blockchain, but no one was advocating for that at the time.
Yeah, just a quick comment on something that I think has played out through a lot of this conversation, and I think it's both with the audience members as well, is that people are coming at it from different sides. And I think that there's a side that cares more about having sort of just a better gold, a better store of value. And then there's a side that cares about this bigger picture about the type of empowerment that blockchain and cryptocurrency can provide. And I care personally much more about the empowerment side than the getting rich side. So I love, so the fact that we can do futures markets now and we can have, decentralized data networks with an understandable view and identity, or the fact that we can go on to OpenBazaar and transact goods and all of these various things like, so I care much more about that side of it and being able to do things where the state can't get involved than, just having a better goal. Live for your dad.
Hi, so my question, so Bitcoin's probably the greatest like speculative asset like over the last 10 years, right? So, but the Bitcoin's problem is that it crashes and doesn't incentivize people to hold it. So do you think that Bitcoin will be overtaken by say like Hex, which incentivizes people to hold it and also pays interest?
Why is he laughing so much? What did I miss?
It's really funny. He said Hex.
Oh, I missed that part. That's what he's laughing at. Before that, I think that's too ridiculous of a question to even entertain. But Patrick's still laughing. I gotta like call bullshit on something, right? Like, I'm sorry. if you have to create your own money or potentially, none of us like the SEC, but I also don't like people, creating securities out of thin air without, I either. Like, I'm not gonna believe a statement that I'm not in it for the money, I'm in it for the technology, but yet I have to create my own money to do it. If you're in it for the technology, then do it with your own money. Like, don't generate value out of thin air to then create the technology and say I'm in it for the technology, but I'm not spending my own money to do it. I created a token which people speculate on, so I got rich and now I can build that technology. Like, no, I don't believe that.
I haven't gotten rich, and that's evident in all the public information about my case. There's no allegations of us enriching ourselves, and I didn't do that. A public blockchain has to have a tradable token to have a public blockchain, right? You're coming at it consistently from the, again, we're kind of going in circles because it's like you're coming at it all from money, and I'm coming at it from this is a new type of database that can do all kinds of different things, and the token needs to be tradable in order for the database to work. But we're going to go in circles, and we should.
We're not going to go in circles because since the moment Bitcoin client was released by Satoshi in January 2009, here's the mentality that it created. From that moment, a piece of code was now monetizable. Prior to Satoshi solving the double spend problem, a line of code was not monetizable, and now it is. And there are infinite lines of code. And now you change one variable in a line of code, come up with a story, and create your own money. That's what's happened since Bitcoin.
I would love, since you know so much about this, for you to publish a formal response to our IEEE white paper that was, you obviously know so much about computer science. It would be great to see a formal response from you as to how this is about. I'd love to see it.
I'm going to work on that.
I know enough about computer science. I have a degree in financial engineering. I did work in programming on Wall Street. And what I see happening right now in the crypto space with everyone creating their own money is just insane.
If I can just answer the speculation argument, this is maybe a little bit of a technical point. I don't know if I'll lose people on it, but like when you're speculating on something, the speculation always is going to have to be that you're expecting higher demand in the future from people who want to use that asset. There has to be underlying utility. You can't be speculating that there's going to be more speculators in the future, right? And the reason you can't do that is because if I'm going to buy something to hold it, I need a return on investment. I'm not going to buy something that doesn't provide a return. But to get that return on investment, you need more investors in the future, right? So if you've got,
well, that's what Hex is, like the guy just mentioned.
Okay, I don't know much about it, but if you're buying it to speculate that there's going to be more speculators, the only way you're going to get a return on investment is if there's like a perpetually increasing number of speculators, right? And eventually, like, that's just not physically possible. It's like, that's almost like Ponzi scheme-esque, right? It's not a Ponzi scheme, but you need perpetually more people coming in. And if you don't want to have that, that's just going to cause these wild fluctuations. If you don't want to have that, you need to have underlying utility and have people speculating about that underlying utility, about people acquiring the asset to access the utility that it provides.
So I have a question mostly for you, Jim. I believe your biggest concern is that altcoins will dilute the market going into crypto and delegitimize crypto because of the great number of shitcoins that are out there. What could there possibly be a better Bitcoin out there? Something that has everything that you like in Bitcoin and is actually slightly better that you would consider adopting? Could you describe that, or can you not conceive of how that's possible?
Yeah, he's going to focus on the latter part of that.
The only way I would consider another, let's keep it in the digital realm, since that's where we're at. The only reason I would ever consider another one is it would have to have a path similar to Bitcoin. That is a brand new technology that nobody understands, is being developed by a small group of people, launched on the world where nobody cares and doesn't think it's ever going to be anything. And it turns into something that could act as money. Right now, if you use the blockchain technology to launch anything that looks like Bitcoin,
it's immediately going to be looked at like Bitcoin. The market's going to immediately give it a price because some people want to do a pump and dump and get rich. So unless you can have that ground roots, organic growth where the system gets value because the system itself is grown in a natural environment where it didn't have value first and it had to prove itself, which Bitcoin did. Most other shitcoins don't have to prove anything. They launch a blockchain, put a narrative to it, give it a token. People want to buy it because they think it's going to go up. Like Chris said, if you do not have a continuing source of additional people who think it'll go up more, it crashes eventually. If there's no utility under it, nobody will want to use it. So these guys, if they have blockchains that have utility, you need to buy their token to use that utility, then they can stay viable. They may not be money. Jeremy doesn't want his library token to be money, and that's very fair and very reasonable. And if his platform can only be used by using that token, and the overall platform is valued by enough people, then it's never going to die. And I don't really care. And I would actually shake the man's hand and say, you did really friggin' good. Because I never believed it would last, right? That's just my personal opinion. Now, I don't know enough about the technology, so it's fair that I shouldn't even really comment about whether or not his thing works exactly like it should. I just couldn't see the need for another token. And I don't see the need for any other blockchains at this point. We have enough of them, and most of them don't do anything. So I hope I answered your question.
Guys, we don't have a problem with technology. Like, we don't have a problem with innovation. What we have a problem is the creation of your own money to fund that innovation. And I'm not saying Jeremy got rich off the token. I'm just saying the token was needed to fund the development. Maybe not in the first month, not in the second month, but that token is needed to continue to fund development. Like, it's not like you can create all kinds of technology you want, and the government will probably leave you alone if you're not printing your own money or you're not breaking security laws, right? But everyone needs to break those security laws, and everyone needs to print money because they cannot build what they want to build without the money. And it's harder to put that money together unless you print it.
Even if that's true.
Okay, I have a question to ask, but before I ask the question, just want to make a quick announcement. We're selling hardware wallets and drinks and stuff, and we do take Lightning here, and we have sold Anna sold 2 sodas for Lightning for $4, a Lightning payment. And I bought a $40 craft-made handmade pen for $40. I actually recorded it because I believe it was the first that I know of actual Lightning purchase at PorkFest. I mean, so I just retweeted on my Twitter, Bitcoin Motorist. So if you want to see history in the making, the first ever Lightning purchase at PorkFest, you can see me make a purchase with a $40 craft pen using a Lightning wallet. And if you need help setting up a Lightning wallet, we're here to help you. If you want to pay in Lightning just to try it out, we'll help you. We're here to help you. Last night we had a guy buy into a poker game for $100 with a Lightning payment. So Lightning is being used. And if you need to know more about that, come see me or come see somebody here at the lounge. Okay. No, we do not. We're Bitcoin or fiat only. So my question would be, I hear a lot, I think I heard Jeremy say it earlier, but I hear a lot that people say that Ethereum is decentralized, which I can't understand why anybody would think Ethereum is decentralized, because it had a pre-mine. So if you have a pre-mine, you're obviously not decentralized. That's just right off the bat, right away, you're not a decentralized project if you have a pre-mine. So my question to Jeremy would be, because I don't know, because I'm not that familiar. I think I may have had some LBRY tokens at some point, but I don't really know if I even have them anymore. I think you may have given them to me for free. But my question for the LBRY token is, did LBRY have a pre-mine? Because I don't know the answer to that question.
Yes, we did, but I don't. Again, we have to define these words. The government accepts that the LBRY network can't be shut down by shutting down the company. We're happy to have the entire company fold, every asset be seized, and LBRY would go on. So to me, that's the
I think the opposite side of that. I don't believe that it would. If you and if you and I don't want you to get taken down by the government, but if you do get taken down by the government, technically the LBRY blockchain is there, but nobody would care about it. It would die on its own, and this is the problem. If Vitalik gets hit by a bus, if Charles Hoskinson gets hit by a bus, those projects die.
I think that's crazy to say.
A slow death.
Look, I think it's crazy to say that if Vitalik got hit by a bus, that Ethereum would go away. I'm sorry, I just think that's insane. And I think it's equally insane to say it about LBRY. You know, there are hundreds of people that are contributing, And people, I don't even write code. So there are lots of people that would continue to write code. There's lots of money that I think would be put in. We have a network that's used by 2 million people a day that some very sophisticated people are interested in. So the notion that if I wasn't here, the project wouldn't exist, I think it's really crazy.
My question is for the Bitcoin only side. Do you believe that everything can be done at the second layer upon Bitcoin, or do you think that if it cannot be done at the second layer, then it should not happen? Like, for example, do you think that Turing complete decentralized contracts, Ethereum style, can be done on top of Bitcoin, or that if they cannot, they should not?
Ethereum doesn't have Turing completeness. That was removed after the DAO hack. That's a huge misconception. And because they realize what happens when you have a Turing completeness, it's too easy to hack. Eventually, anything that an alternative blockchain can do can and will be done on Bitcoin as a layer on top of Bitcoin after that project can prove that it's useful. For example, Ethereum proved that everyone and their mother wants an easy way to print their own money with an ICO. That's basically Ethereum's contribution to society. It wasn't smart contracts, it was the ability for others to easily create their own money or security or a combination of both. And after it was proven that that is Ethereum's contribution to the world, a platform to create your own token, eventually people said, you know what, maybe people do need this stuff. So now we have the Bitcoin liquid sidechain, which allows you to create the same exact ICO token that Ethereum made popular back in 2017. The functionality will be there, right? But like crazy ideas come along, 100 crazy ideas come along every single day. Bitcoin developers are too busy making sure that Bitcoin's fundamentals are not screwed up, which is the fact that it's decentralized, value transfer that's unconfiscatable, and there will only be 21 million Bitcoin, and it's still fairly easy to run a node, and the system stays decentralized and censorship resistant. But if 3 to 4 years go by and some alternate blockchain proves some kind of a use case, someone will just say, yeah, I'll put that as a layer on top of Bitcoin, and if people want to use it, they can use it. But there will not be an inherent token. And without an inherent token, there is a lot less incentive to pump that ability to do it.
Let me just, for the sake of the audience, just describe what Tone's talking about when he says layer on top of Bitcoin, like Liquid. If I were to take Bitcoin and send it to an address, or let's say you guys send me your Bitcoin to an address that I hold, I can then have a server that does stuff like tokens or any of the smart contracting stuff, and it's completely centralized and custodial, right? You're sending me the Bitcoin and you're trusting that I'm not going to take them and run, right? There's a custodial nature to that. Well, what Liquid is exactly that. It's just what I just described. There's an address on the blockchain, and you're sending your coins to someone's address. It's a multi-sig address, so there's multiple parties control the keys. It's still custodial, right? It's custodial where you have multiple parties. So if that doesn't quite sound the same to you as, say, Ethereum, it's because it's not, right? So there is a functional difference there. And just saying, well, it's all going to be done that way, everything in the future. I mean, there's a reason why people aren't doing it that way. And it's because of that quasi-custodial nature of it.
Well, we've already stated our arguments as to why Ethereum is not decentralized. Basically, you can't run your own node, you can't validate your own transactions. We all know who the leader is, and they're getting rid of mining. So thinking that your project is decentralized by being on top of Ethereum is insane. You're better off with a centralized database. At least there is someone keeping a backup. If you are building something and Ethereum is and the underlying Ethereum layer is your only source of truth and your only source of data storage, what happens to your project if Ethereum goes belly up? Okay, So either way, you're keeping a centralized copy of it because you can't trust Ethereum. And if you can't trust Ethereum, what other blockchain can you trust? You are keeping a local centralized copy of your project anyway, because otherwise, if Ethereum goes belly up, it's your fault.
There's a number of things there that I think are false, but I'm not even going to respond to. What I think is important to recognize is this notion, this question of whether or not Bitcoin can simply adopt these things. And I think Bitcoin is the consensus choice. Bitcoin will continue to be superior, not because it's technologically superior, but because it is the consensus choice, and that's the power of being the incumbent. If I could clone Facebook tomorrow, every aspect of the software, that would not allow me to compete with Facebook, because no one's going to come to my Facebook because everyone else is on the other Facebook. So, like, whatever project is getting traction, whether it's Augur with futures markets or LBRY with with digital publishing, this notion that you could simply co-opt the features, that's not sufficient, because the users and the momentum and the traction will already be oriented somewhere else. And so it's not as simple as mirroring what can be done, even taking it as a given that the mirroring is possible, which I think is questionable. But the same thing that keeps Bitcoin superior from potentially better technologies is the same reason that Bitcoin will not be able to simply mirror some of these developments.
Okay, so the first time I ever heard about Bitcoin, I was standing about 4 campsites from here. It was 2011, and someone had just paid 24 Cassatius coins for 2 tacos. I'll go down in history right there. But I thought it was interesting, but not interesting enough to get into right at the moment. It took me a couple of years to get into crypto overall, and when I did big, and I'm glad I did. It was Bitcoin, and when I got to reading about Bitcoin more and not listening to what people were telling me, I read Satoshi's white paper on Bitcoin, and what I discovered was basically the reason he created Bitcoin in the first place was that he was very upset about things like Enron and the housing bubble crash and the Federal Reserve's manipulation of the value of the currency, constant inflation, and things like that. People, sorry, people are getting their entire life savings wiped out by criminals in high places because they have control of the currency. And the purpose of Bitcoin was to kind of release the currency to the people, so that they wouldn't have to be beholden to these high-level criminals. Very, very cool. I also would like to thank Satoshi Nakamoto for doing that. I would also like to thank Henry Ford for inventing the assembly line so that we could have Model A's and Model T's fast enough where the average man could afford them. That does not mean that I'm still going to drive a Model A or a Model T. And if I race Le Mans next year, I'm not going to do it in a Model T that's souped up with a Lightning network. I'm going to do it with a 2022 Porsche 911 GT3 or something that will actually do the job. That said, on May 13th, our house had 2 of its walls torn off by the FBI at 6 o'clock in the morning, and some camouflaged goons came in and pointed guns at us. And it was all over cryptocurrency sales. And by the end of it all, when they had me handcuffed to a chair in my kitchen, they weren't asking me about the ins and outs of Bitcoin. It was clear to me they didn't give a shit about Bitcoin. They were more concerned that we were talking about cryptocurrency at all, a lot, and recommending it on our radio broadcast, nightly radio broadcast. They were really interestingly interested in Monero. And they asked me questions about Monero for about 20 minutes. And we don't talk about Monero very often, and we certainly don't sell Monero. So it was a dead giveaway to me that although Satoshi Nakamoto had the right idea, his level of security in Bitcoin wasn't quite there, and tracing a Bitcoin transaction is not impossible. If we're going to have freedom, we have to have privacy. We have to be able to make a transaction with a friend. I should be able to pay the kid next door to rake my leaves without having to have him report.
You have a question? Seriously.
Yeah.
We got a lot of people waiting.
Yeah, I do.
This is
So
question.
I don't think people mind. But I shouldn't have to pay the kid next door in a currency that the US government's going to be able to track and then fine him for not having EIN number for his business. And I think that's basically all I want to say. Monero is a privacy currency. I suspect other privacy currencies will be coming down the line. And I'd like to thank Bitcoin for doing its early job, but at this point, it belongs in a museum. I don't like it. It's slow. Lightning Network is a Band-Aid on a gunshot wound, and it's not private.
Go ahead, address it.
All right, so if you want Monero, you don't get to monitor the blockchain. You have no idea how many tokens are out there. It's not going to be the same. Bitcoin blockchain needs to be open so everybody can monitor the supply. The only reason a single Bitcoin is traceable, as he walks away, does not want to hear the rebuttal because he thinks he's right, no problem. The only reason any Bitcoin is trackable because government forces you to KYC with an on-ramp. That is the only reason. Bitcoin is not traceable if you cannot connect the UTXO to an individual. You don't need privacy on Bitcoin. You just need the government out of our hair. That's it. You don't need the Monero. Just need to get rid of the government now. Privacy is being worked on. It's being worked on in all kinds of layers above the Bitcoin base layer on purpose because you need the Bitcoin base layer to be auditable. You need to make sure no one's adding anything to the supply. You need to be able to run your own node so you can verify on your own without having to trust anyone. Go join Monero and you're gonna have to trust what they tell you about the supply and everything else about the way it runs. Because the transactions are confidential. That's a good thing. If you needed to make a confidential transaction, right now you can peg into a liquid network, use a confidential transaction, and peg right back into Bitcoin with zero risk. Zero risk. Yeah, except for the, wait, hold on, except for the validators in the liquid sidechain, correct. It's not, there is a trust trade-off in every single thing in this space. You want to use Dash, you want to use Litecoin, you are trading some level of trust. The Bitcoin blockchain is meant so you do not have to trust the protocol layer because of the way it works. And you still don't. You can join, anyone can join, and you never have to worry. If you can learn to read and write code so you can trust the code, or you can trust somebody who told you what it's doing, like I have to do. But the bottom line is you can trust that protocol to not be disrupted because it's at the base layer. It has trade-offs. It has to. It has to have those trade-offs. The ones you want for privacy and everything else, throw all kinds of different trust layers into the mix, especially the one that you have no idea if your supply is being manipulated and you are being devalued because of inflation within your network.
Can I just say, I want to ask you a question. I'm going to give you a hypothetical and just kind of see how you handle it. This seems like a realistic hypothetical to me, but suppose we're 5 years from now, 10 years from now, let's say the price of Bitcoin has gone up to 300,000, right? We're an order of magnitude increase. And other countries besides El Salvador have adopted it. And we're seeing like a couple orders of magnitude more usage of Bitcoin, and fees have gone back up on chain to $50, $100. And in that environment, do you think Lightning is viable with those high fees?
Yeah.
Okay. So someone pays $100 and they're going to amortize that over 20 years? Like,
no.
What do you mean?
No.
Like you pay if you want your fee level to come down to a reasonable level, you need to spread that initial fee over enough transactions, right? Like so that your average fee per transaction is cheap enough, right? So if you wanted to get it down to like a penny per transaction, your average fee, that's like 20 years worth of purchases, right?
No, there is technology being built right now to address this. There are things called like pay join, where you can.
Thank you.
Didn't hear what he even said.
So I think my broader question is like,
hold on, not even close to custodial. You have no idea what you're talking about. No idea. We're talking about multi-sig contracts.
Lightning channel transactions.
Correct. There's all kinds of ways to do what you're describing. That's being worked on currently.
So
right
you don't think
Bitcoin.
A really high fee is going to be a barrier to any sort of
Absolutely
off-chain layer two?
Absolutely not. No, especially on the Lightning Network, it's irrelevant unless you have to close a Lightning channel, and that will be done in the future. And that will be done with multiple, hundreds, if not thousands, of channels being opened in one transaction, and that fee will get split.
Okay,
it's happening.
Well, but
it's just not fully implemented.
The way Bitcoin works is as you join more transactions together, the size of the transaction goes up, and so does the fee.
not necessarily.
Yes,
There-
yes, that's how Bitcoin works.
Yes, as your restaurant becomes more popular, there will be less seats at that restaurant. That's literally how capitalism works. And the only way to keep Bitcoin decentralized is to keep that block small. But I just want to get back to the Monero question real quick. Look, it's a trade-off. If you want, do I wish Satoshi made Bitcoin more private at base layer? Yes. Do I know why he didn't? It's possible that he did it because he knew this was the better solution. It's also possible he made a mistake. I don't know what the thinking was in 2005, 6, 7, and 8, and he built it the way it was. But I don't know that Bitcoin would be better right now if it was private from the beginning. It might not have taken off. Governments might have tried to squash it earlier back in the days that they could. I don't know. I don't have a time machine to go back and like test alternate scenarios. But I will say right now, if you do choose to use Monero, you are exchanging your ability to make private transactions with very few people that are also using Monero. And as a trade-off, you are significantly creating the probability that your savings by storing Monero trend towards zero. That's a trade-off. And I'm okay with people making that trade-off. It is a free market, right? Monero was not an ICO. Monero was a direct competitor for Bitcoin as money. So I don't see it as scammy as a lot of these use my token to use my product, right? I'm okay with Litecoin being competition. I'm okay with Monero being competition to Bitcoin. I just try to explain to people why they're not as good as Bitcoin. Monero is one of the harder ones, but it's a trade-off. You are trading off your life savings for privacy. And for some people, it's worth it. And for some people, for a little extra privacy. And hopefully Bitcoin will have good enough privacy to also retain the increase in value of its savings. Because over time, the value, the savings value of Monero or the purchasing power of Monero will decrease because Monero actually has competition for other privacy coins. And Bitcoin doesn't have competition because it's the most decentralized and gets more decentralized over time versus other crypto. Other crypto gets more centralized over time or stays the same. Bitcoin continues to grow it in decentralization. So it has no competition in that space. So you are trading off more decentralization versus a little bit of extra privacy.
I'm just commenting. I'm running out of time, and we have a lot of people with questions.
How many people here transacted Bitcoin before 2017? All right, cool. A lot of people did it here at PorkFest. All right, well, we have here Lightning Network. It's a silver certificate, and then we have Bitcoin. Okay, we have layer 1 and layer 2. And these people want us to go and trade these IOUs that these ones, they had a rug pull, right? Remember that? We don't even touch the layer 1 anymore. You know, as far as anyway, long story short, I don't trust this Lightning Network stuff. This Venezuela stuff, or Venezuela, excuse me, El Salvador. They're using a closed government like sanction system of nodes, so it's not even accessible to the rest of the network. It's a custodial wallet. Strike is a custodial wallet. So they're trading IOUs, and they're mandating that the citizens of that country use USD and BTC, and only trade IOUs of those BTCs. So I don't see what's so revolutionary about that. Maybe you could tell me.
I think you have a misunderstanding of how the Lightning Network works, and I don't know who told you that.
Well, no, the president himself said.
Well,
on an interview.
But remember, Bitcoin is now a legal tender in El Salvador, and and what that means to me is that people can freely use Bitcoin without the concern of a government agent knocking on their door for using Bitcoin. And just because Strike is the only popular way to use Bitcoin last month in El Salvador doesn't mean it's going to stay that way.
It's a government sanction.
I have a very good question. Sure, I'll just comment quickly that, you know, blockchains, public blockchains are fundamentally have poor scaling properties. You know, as they get more popular, you're going to run out of space. So even if the Bitcoin blockchain was 10 times the size, you'd still have these or 20 times the size. As it continues to scale, you'd still run into these problems. And in my view, this is a very open question as to what the best solution for this is. But I think the fact that I don't think we should inherently be against layer 2, even if fundamentally it certainly feels better to not have to do that. And I get that. But I think that because they have this anti-scaling property, we do need to be investigating other ways that it can be done. And that's not a full-throated defense of Lightning specifically, but the idea in general that we should at least be open-minded about these layer 2 type things, I do think we should be open-minded.
Excellent. All right, so I got a quick question. I would appreciate just a yes or no. Do you consider Bitcoin fungible?
I do consider it fungible. It could be better, and it's going to get better. Everybody wants everything yesterday that is needed for them, right? Bitcoin is innovating fairly equally across multiple areas: privacy, fungibility, scaling, while making sure that the most important properties are intact. What's the most important property? The fact that it remains unstoppable and decentralized. If you interfere or if you fuck up, it only takes one fuck up. It only takes one thing to ruin Bitcoin being decentralized. Do I believe it's fungible? Yeah, I believe it's fungible, but it could be better.
Yeah. I believe every UTXO is equal in its qualities with every other UTXO. So as far as I'm concerned, that's the definition of fungible. One is like the other.
It's as fungible as the $100 bills in your pocket. Like if you show up at a bank to deposit $100 bills and they check the serial numbers and they came from a bank robbery, you're gonna have the same problem as Bitcoin does.
I agree. Bitcoin's a lot easier to trace than dollars. But,
only because the government linked your identity to
a single Bitcoin.
Without that, it's not traceable at all.
Right. Bitcoin is only traceable because too many people are lazy and they're buying them through government banks.
What's the best way to buy it? That's what do you think?
The same way you buy gold. Do you buy gold on with your credit card? Do you buy gold with cash? How does everybody? I'm sure. How many of you here own gold or silver? Did you buy it through your bank or did you buy it in cash? So why aren't you buying Bitcoin the same way?
We are. I bought gold with Bitcoin once. Terrible investment. I lost like 20 grand on that.
Yeah.
Excellent point by Tone. Along that, I have 2 questions. One, can I do a peer-to-peer transaction for some privacy coin? If anyone's interested, can I do that? And also, all of you guys here on the panel and anyone in the audience, would you like $5 in Bitcoin Cash?
No.
No? Okay. Everyone raising their hands, get your wallets out.
Right. So basically, this is a great example, right? Everyone that raised their hand and said yes, basically $5 matters more to them than principles. Everyone's different.
Yes, for sure.
Exactly, right? So you are giving up principles for $5, right? Like look, everyone, nobody wants to be a snitch. Where if the government comes and gives you $1,000 to be a snitch, a lot of people are going to be a snitch.
How am I being a snitch? Yeah, I don't know. I'm giving up time, so there's not. The only thing I'm giving up is whatever the 30 seconds it takes to get it.
The $5 is not worth it to me to download another app, to connect to another network, potentially exposing myself, my cell phone, any of my data to some people who might have a backdoor to get to know some information about me for $5? Hell no.
It's basically like the government is bribing everyone right now to take the vaccine. This is no different.
All right, so I'm a little confused. Are you arguing that Bitcoin is sound money or a sound network to build upon, or both?
So Bitcoin is sound money. In order to make Bitcoin sound money, it needs a sound network. If in the future, people want to leverage an actual sound network because it was built to be a sound network for their other projects, the Bitcoin network doesn't have gatekeepers. No one is stopping you from leveraging the soundness of the Bitcoin network to build other things on. But yes, you do not get to alter the Bitcoin network for what it is you need it to do, right? You either got to find a way to leverage the soundness of that network, or you built it in other ways. But I just try to inform people that if it needs to be built in other ways by printing money, it's a problem.
I'd like to elaborate on what many people would not even be aware of right now, which is known as the RGB protocol, which is a third layer on top of Bitcoin.
Similar to Liquid.
Similar to Liquid in that there's a different trust trade-off. But the idea is that the value that's being moved around is linked all the way down through Lightning to the base layer of Bitcoin. So you're using Bitcoin first on the Lightning network to transact it very quickly at almost no fee. And then on top of that, the RGB network, which will provide, let's call it smart contracting capabilities of very unique kinds, using things called single-use seals, open timestamps, very interesting cryptographic technologies that allow you to have different trade-offs, different levels of trust, but ultimately the value you are dealing with is pegged down to the Bitcoin base layer. This is the stuff that's happening. The internet is built on layers. An internet native money is also going to be built on layers. And so it's happening. It's 12 years in, folks. We got 8 billion people on this planet that are used to one or more forms of money. The world has now been introduced to a new form of money that's going to take quite a long time for everybody to get it. While that's happening, very smart people are building all the functionality that everybody wants in yesterday, right? It's 12 years in. It's going to take some time. But very smart people are going to make sure that all these things get done on what is the strongest, most important base layer money, digital money that's ever been created, Bitcoin. So if you got value to move around, the best thing you can do is move it around in a system that pegs it to Bitcoin, not some other cryptocurrency that may or may not gain large-scale adoption and may or may not hold your value into the future when you need to redeem it.
Real quick. So Jim here is, how long have you been a contractor and like building homes?
30 years.
What happens when you start building a home on a shit foundation?
Yeah, there's a lot of principles that go into home building. My attitude towards plumb and level is irrelevant. If I ignore it, I get screwed, right? So there are principles to money. You can ignore them, but it's not going to work out well. So if you don't have a good foundation, which we consider the Bitcoin base layer, the foundation, build everything on top of that, you'll be fine. Build that stuff on one of these other cryptocurrencies, maybe not. Maybe. I mean, Jeremy's made very good points. He's almost got me convinced that LBRY is really actually a good ecosystem. And I'm actually going to investigate it because I'd really love to know. I don't believe I'll find anything of value there for me, but if other people do, great. And I think everybody should be allowed to do whatever they want. I just don't think most of these are ever going to be around in the future.
All right, so from what it sounds like, the value is the network itself, not because it's a shit currency. It really is. Like, is every Satoshi the same?
Yeah.
No, absolutely not.
Why?
Tainted coins. You have shit like Cipher Trace and all this other stuff that comes out. Then if a drug dealer deals money with Bitcoin and then you happen to receive some of that Bitcoin or Satoshis.
Yeah, tainted because some other human being puts a label on it. It has nothing to do with the way the system works.
But it's still traceable. Money shouldn't
Whoa,
be traceable.
All things in life can be, what is traceable? One human gets to decide that they know what you did. That's what traceable is. One other human being walking around on the planet decides, oh, I can see what that guy's doing. What does that even mean? If they got a power over you and they decide you did something they don't like because they traced it, that's simply government deciding they rule you.
So can I see your bank account? See everything you spend your money on?
I will never let you see my bank account.
So
Why would I want to?
why would you use Bitcoin to spend money on buy shit?
Well, you don't understand. I was trying to say this, and you literally just are not listening. The only reason anybody knows what UTXO is connected to what person is because government made sure that happened. That is to say, most people can't get Bitcoin because we live in a world run by a bunch of parasites that control us. And in order for you to take your shitty fiat money and turn it into Bitcoin, most people are stuck using some regulated, which is bullshit, bunch of other people saying you must do it our way or you go into a box, right? A regulated exchange, a bunch of parasites call themselves government and say, you want that Bitcoin? You got to do it the way we say to do it. And we get to track who you are because of it. That's all that's going on here. The Bitcoin network does not see people.
Yes, but Chain Analytics sees people. And lastly, real quick, one other
Chain
thing.
Analytics is the same. It's the same thing. It's the same thing. Chain Analytics is just people deciding what UTXOs went where and who combined what. And until you link that to an individual, you have no idea who owns
And the
what
same
Bitcoin.
damn problem, though. If you go
What's
with
the
a privacy
problem?
coin like Monero, Pirate Chain, whatever, can't see shit. That's sound money.
You also
Everything is the
can't.
same.
You also can't audit the blockchain, so
Guys,
you don't know
again,
if they're increasing
again,
inflation on you.
everything-
Come on, dude.
Everything is a trade-off, right? Like we know that yes, Bitcoin transactions are more traceable than Moneros. We know this, okay? Yet Bitcoin is still worth significantly more than Monero, and Monero continues to devalue against Bitcoin over time. You just named Monero, you also named Pirate Chain, I can name Zcash and Dash things. How do you know that?
It's optional privacy. Optional privacy.
How do you know Monero is actually private? So here's the trade-off, right? If you put all of your value in Monero, and then all of a sudden it's discovered that Monero ain't as private as they claim, all your value goes to zero, right? If you have no money to spend, who cares if you have that money as private, right? And instead of trying to dilute people by making them put their savings into something that has a very high probability of going to zero, spend your energy adding privacy to Bitcoin instead.
Optional privacy. And real quick, how is Bitcoin decentralized?
Nodes, coding, and mining. Three things that Monero lacks in all three of them. The decentralization of developers, it has no ASICs, so its mining strength is very small. And do you run a Monero node? Because if you don't, none of this matters.
Yeah, I do actually.
You run a Monero node.
Hold on, real quick. How many ASIC companies are there that mine Bitcoin?
How many ASIC companies?
Yeah.
ASIC companies. So go build one and compete. Like no one is stopping you, right? No one is stopping you from competing.
That doesn't mean it's not that doesn't mean it's decentralized. How many people have the ability to change the code in Bitcoin? 3, 4?
Well, but if you run a node, you don't have to use that code.
It's centralized around those developers.
Okay.
So,
Guys, complaining that Bitcoin is centralized and your solution is 100 times worse and somehow that's better makes no sense, right? Look, I know I can't get to Mars because we don't have the technology yet, but saying that our technology isn't good, like, what's a better alternative? There isn't one.
So you guys have been complaining that people need to create these coins in order to afford to build these platforms on top that they're building on altcoins, because apparently it's too expensive to do on Bitcoin. Why should myself and the other 2 million users of LBRY have to wait for someone sufficiently wealthy to come along and decide to build the platform that we want to use on top of Bitcoin? And if any idea like this that is flushed out and proves to be a viable model that people want to use can later be added to Bitcoin, why is that not a benefit? Why is that not a great thing for Bitcoin and for the entire ecosystem? Wouldn't trying to prevent people, convince people not to do this, be the thing that's holding back innovation?
I have said repeatedly that I'm not against the innovation. I'm not against people valuing that network or using it. I'm against the idea, and it's not Jeremy that I'm talking to here or Chris. I'm against the idea that people are trying to equate shitcoins with Bitcoin, that most of these have no real use value, and they're trying to tell you that you can tie their token to the real world in some way without a trusted third party, which is not possible. And so if they're not trying to be money, what are they trying to do? And if they are trying to be money, they're never going to compete with Bitcoin because it's too late, and they don't have the immaculate conception or the network effect. So I see it as people slowing the adoption of the most important technology that will benefit all human beings. A form of money not controlled by any government or any single group or any single individual. By having that level playing field, people can save their value and know that it won't get debased, at least through inflation. What it can be exchanged for will fluctuate forever, right? Because all value is subjective. We have an average value that is set by market actors every single day, and it fluctuates constantly. But there will be a time where if Bitcoin becomes the worldwide money, that fluctuation value in purchasing power will slow down or stop completely, to the point where if you think about all the value that sits on this planet today, there was 1 million years ago when none of it was here. The reason it's all here is because humans came together and brought value onto this planet. And we were able to do it at scale because we had something called money that allowed us to interact with each other. If there's only one source of money and everybody has to use this finite amount of tokens, let's call them, the only thing that can happen, even after it's all completely distributed and there's no other money available, as humanity creates net additional value on the planet, that is more value created versus destroyed, the static number of tokens needed to move that value around, because it can't increase in its amount, it can only increase in its value to move those things. That is, Bitcoin will never stop going up in its ability to purchase more things in the future because more things will be created and the supply of money will not increase. So NGU technology, number go up, is forever, right? Even if after the speculative hype and the people getting very rich on the very large swings in the value of a Bitcoin, after that is over in 100 years or whatever, you can still count on storing your value and have it be worth more purchasing power in the future simply by the fact that all humans are very efficient. We continue to create more value than we destroy, and with a single unit of money to work with for everybody, the value of each unit has to go up in order to facilitate life. So you can count on storing your value in Bitcoin forever and having it be worth more in the future forever, which means prices will always go down in your life relative to your stored value if you put it in Bitcoin. If you put it in something else, not necessarily guaranteed. I hope that answers your question.
It's not a guarantee for BTC either.
What? Sorry. I'll answer it directly. You may think this blockchain with its own token is innovative, but you have a personal motivation in getting rich from that token. So you will promote that token. That's what we've seen over and over and over. You yourself might be the exception, but 99.9% of the people are not. Everyone is promoting the tokens they're holding in order to get rich. And when those things blow up, and they always blow up, and they go to zero, all of a sudden it's nobody's fault.
I hold about $1 with the library.
I'm not sure what you.
I'm a user of the platform. I'm not an investor in it. I'm not trying to get rich off of it. I want a decentralized platform to watch content.
And we'll question the fact that it's not decentralized. I will question the fact that it's decentralized because it's not decentralized. And just like Steam, it wasn't decentralized, and all these other ones, you're believing in the hype that it's decentralized. It's not. Only Bitcoin is, and even that potentially could be disproven.
I'm not exactly sure about why the library token is needed. I went on Odyssey, the decentralized YouTube, and I could watch anything I want. I didn't need a token. So I still can't see why it's needed, honestly.
Right. We're not questioning the platform. We're questioning the existence of the token. That's the problem. The problem is the token. Okay. And yes, and when you build your project with the token, you actually have an unfair competitive advantage against more honest people that are building this thing without the token.
Yeah, like I don't want to start all this again. We've already had this conversation like 6 times. Odyssey is not library. Odyssey is an interface to library. You don't need the token to watch content that's free. You do need the token to publish things or to create your handle or to take some other basic actions. And that's because those actions are being written to a public blockchain. But like seriously, we're gonna go in circles. We've had this conversation for 2 hours. I think having to come back to Eric's question, I think having an open competition for all of it, for currency, for technology, for blockchain, that is always better. That's how we find the best results. I don't think that Bitcoin is necessarily on the verge of being unseated, but I think that Bitcoin itself, even if it is the choice for the next 100 years, that having that competition would even still only make Bitcoin better. And I don't think that it's a given that it will be. I mean, and that's the nature of markets and open competition. And it's like, I think it's a pretty strange argument to say that there's something special about this case. And pretty much every libertarian economist would I think would agree with me as well on this subject. So that's all I got.
I've had the same argument for Binance. Binance, the exchange. Somehow, for 400 years, we've had exchanges since Amsterdam, and yet Binance needed their own money to have an exchange, right? They don't. They were just a way to print money. So they have $1 billion to be able to build and outbeat their competition because their competition doesn't have a token. That's how I see all of them. All right, Patrick, you want to sign us out?
Yes, I just before we sign off, thank you everyone for coming. Thank you to Jeremy and Chris and Surfer Jim and Tone. Thank you so much, and thank you for the audience for asking the great questions. It did get heated, but we're talking about money, so thank you everybody. And I just want to make a quick announcement. We are going to have just kind of a meetup at 2 o'clock here. So if you want to, feel free to come by and lounge around and talk Bitcoin. And we did schedule to have a 5 p.m. Panel with John Ballas, but unfortunately it's going to be raining, and John Ballas left 3 days ago. So unfortunately we're going to cancel that. So our only event left is going to be the meetup, which is around 2 o'clock. We're just going to be hanging out, and so just come hang out with some toxic Bitcoiners at 2 o'clock. And that's about it. There's no other events that the John Ballas one is not going to happen.
All right, thank you guys for sticking around. All right, I'm exhausted, and I think I'm taking the rest of the day off, guys. PorcFest to tomorrow afternoon. It'll be time to head out. I should probably glance at the price of Bitcoin because I haven't yet, and let's see what the price looks like. All right, I don't think much has changed. We're consolidating, but we're consolidating near the bottom on a 1 hour chart. This has the feel of a symmetric triangle with a higher probability of coming down. So at the moment, I do not see anything technical in the chart that's telling me this is the low. It could be the low, but I don't see anything in the chart that tells me that this will be the low. And I will, at the moment, I think there's a slightly greater than a 50% chance this low will be broken. It's not enough for me to scream short, and it's certainly not enough for me to jump in a long trade. So I will continue to stay patient and wait. All right. Thank you guys for watching, and see you all probably tomorrow. Bye, guys.